Good morning, guys. How are we all doing? Happy Monday, everybody. Welcome to the new trading week. I am Dan from Trading with Dan. This is our Bitcoin morning update. Hope you guys have all had a great weekend. If you guys wouldn't mind smashing that like button, we shall go straight over to those Bitcoin 4-hour charts. So we are still below this resistance level, still above this support level. Not that I would call it the most the strongest level of support in the world, but we are still above it at the moment, which is obviously good. Very low vol over the weekend, not much going on, so we are priming ourselves for a move here. So yeah, what direction would it take? Most likely take the direction that the equity markets take and just general wider risk markets take. So we're gonna have to go and look at them and see what they are looking like. Yeah, we are on Monday. Is this gonna be the Monday? Is this gonna be the crash Monday? Where we tank down into, well, I mean, at least initially, if we were going to actually crash, we could easily get a 32 handle, and it would only just take us down to the bottom of this formation. We've had pretty aggressive moves down, as you can see, like this, on the course of one day, and yeah, we have really got to be on crash alert at the moment. I think that the Federal Reserve and the other central banks are fully aware of the precarious nature of the situation. The fact we're just sat on the edge of a cliff here. So yeah, obviously other markets are starting to move. If we do have a look at oil. Oil is making a pretty aggressive move up here. Could have put in a short-term low here, a medium-term low even. Sorry. So we now could be looking to break this trend. Of all the bounces so far, I kind of suspect this is the one that's got the chance of breaking the trend, getting back above 85 and then testing back towards the 90s. I don't think we are realistically going to get deep into, well, I say deep, it's not that deep, but into the hundreds anytime soon. I think we'll get potentially into this resistance, maybe a few wicks above and then come back down. But yeah, we'll have to see how that plays out. Sorry, the 10-year looking like it could have put in a top here. It did accelerate to the upside, has pulled back, now it's kind of consolidating at this level. And I mean, just historically looking at charts, lots of different charts or lots of different assets, this does look like a potential top. We could trade here and then maybe have a little bit bounce higher, not take out this high, and then basically drop down lower. But obviously it will depend on well, how central banks are feeling, aren't they, I guess. DXY also looking like it's potentially topping here. I mean, famous last words there. It's been looked like it could have been a top, all of these moves up, but this move has been particularly aggressive to the upside, especially off the back of all these moves up already, i.e. taking us just to a higher level that is completely unsustainable in the current globalized financial system environment. So yeah, that's why, I mean, like we said, we've got this level here. If it reclaims this level, then yeah, we could test back up to here, and if we take that out, then we're in trouble. But we could then get rejected the next one. Or however, if we are to take out this low, trade lower than this support level, then yeah, we've got this support level, and then, I mean, if we take that out, we will be looking pretty good for a risk asset rally. However, yeah. That is probably the level that I think if we do take out, then we can certainly be targeting lower, and that is about, well, it's on 110.7. Yeah, what else do you want to look at? Here? Let's have a quick look at the currencies, seeing as they are pretty well, where the action is. The euro against the ruble, I mean, still in dire straits down here. The euro against the USD having a nice little bounce, obviously off its pretty much capitulation move up, maybe in the dollar. It did have a similar bounce down, and obviously the same with the pound, had the same one. As you can see now, though, funnily enough, this did look like a strong bottom, and we have now fully retraced well, the whole of this cascade move down. So yeah, just trading like a cryptocurrency SH1T coin. But yeah, back up there. Obviously, apparently Liz Truss is not going to be able to cut these taxes that she wanted to do for the wealthy. So that obviously is helping that recovery. The US dollar, Japanese yen, I mean, this shows what a central bank intervention does. Basically nothing. And I could even say even nothing. It only affects the short term, but it's barely even affected the short term. We are literally on the identical trajectory that you would expect to be if this hadn't have happened. Just some sort of just absolutely awful, atrocious looking ascending triangle here, which I say it's atrocious because obviously if this then breaks higher, I mean it's just problems. It's just problems basically for Japan. Obviously I'm ignoring that move down here. But yeah, just a clear ascending triangle. Not really what you want to see. Not what you want to see if you are a Japanese person that is concerned about inflation in Japan. Not that inflation is that high in Japan. I think it's only about in the 2% compared to like the rest of the world. But they have been locked in a battle with deflation for a long time now. The ruble US dollar not really doing too much. Just hanging around at these highs, as you can see, not a lot. An interesting thing to look at here is the mortgage, 30-year US mortgage. Just ridiculous levels for people that are wanting to remortgage now. However, a lot of America's not like the UK, where a lot less people are on adjustable rate mortgages, or even people with fixed rates in the UK are often, they're in like a 25-year mortgage but only fixed for the first 2 years, 2 or 3 years, or maybe even 5, and then again they have to reset. It's not the same dynamics in the American mortgage market. So yeah, maybe we'll see how that goes. But my only real point is that in the UK it's a lot more precarious situation because we have rates going higher, and also and yeah, like I said, we have a lot more people exposed to that interest rate risk. What else do you want to look at? Nothing really. Let's look at gold versus the pound. Obviously, as the pound has had this little bit of a bounce, it is pulling back. But you can see this is a potentially it is a bullish looking chart. As to whether it continues bullish will be the question, but this is the bullish looking chart. And if we just look at the dichotomy, the opposite with the US one, but we are in this trend line to the downside. So this is silver, sorry. I clicked onto silver, not gold. But yeah, silver has this descending channel, so maybe we do break up, regain this support. But basically this is just going to be a dollar move. If the dollar does continue to move down, then yes, we'll break up. Similar with gold, the actual chart I was looking for, not looking the most bullish at all. However, if the dollar is to move down, then we shall rally. But I think a lot depends on what is said now, because we're at a point where things are breaking. There are big banks. Credit Suisse obviously is one people talking about. Deutsche Bank has been in trouble forever, but also potentially in trouble. They're all in trouble. If one's in trouble, they're all in trouble. They all have counterparty risk, and yeah. So I mean, things are fully breaking out. This has been what everyone said all along. The Fed is going to keep tightening or whatever until somebody breaks something. It has now broke something. That has happened. So now we can see what the Fed is going to do. Didn't manage to pull an inflation. However, I mean, I have lots of thoughts about this inflation narrative. I mean, it's like you lock the whole country down, you stop production, you stopped everything. So obviously you massively reduce supply. China's gone offline because of it practically. We massively reduced supply. You printed a load of money, which is like, I'm not saying that is it's not obviously, it is potentially inflationary, but you print a load of money. But the main inflationary thing was obviously supply being taken off the market. But yeah, obviously you print a load of money, then people still basically have the same purchasing power for a period, even though supply's gone down. Therefore, prices are going to go up. But the point I'm trying to make though is that so then if you're then wanting to cut the demand back down to then meet supply, you basically massively reduce supply, therefore massively reduced the size of the global economy, in theory. Not in theory, what you have done. And now all of a sudden you think, right, so it's simple, we'll just reduce demand to meet that massively lower level of supply by making everyone obviously poor enough to not be able to buy anything, to then obviously then everybody fit into only being able to buy what is available, which is massively reduced, which is just stupid. You're just gonna have to try and hope the economy can recover, get things open, increase basically supply, to back to try and get it back to previous levels, or at least near there, and a policy of just supply staying constrained, and then thinking you're just going to reduce demand to meet that supply, the supply that's available, is just like you're literally just wanting to cut global GDP down by massive amounts, and it's just a stupid thing to do. And if you do that, you are then going to bring in inflation. You're then going to cause a global depression. You're then going to end up with a massive pendulum swing into a massive deflation, and you are formally and finally going to collapse the financial system. So I'm not sure when that penny is going to drop. However, these guys are smarter than me. They know all this, but they've obviously thought they've shot their shot at inflation, not managed to maintain it, not managed to obviously rein it in. Rein it into where they wanted to before something broke. Now something's broke, so now obviously we're gonna have to see what they do now. So that is pretty much it for this video. So in fact, actually it's not. Look at stochastics. How are they looking on this Monday? On this Monday morning, yeah, potential upward bias from the 4 hour, which is good, but 12 hour not looking good here. Daily looking to freshly turn down here. Even the buy daily looking to turn down at this level. 3 day is still pointing up though. 5 day, they're back down again, not looking good. Weekly, there or thereabouts. Bi-weekly down, and obviously monthly, as you can see, down, but lost a little bit of its down momentum. So, I mean, whilst ever we are, let's just get back up to here, back to the 4 hour. Whilst ever we are, well, obviously well below this, basically just over $20,000 level. I mean, there is a severe risk to a break to the downside, and unfortunately any upside is potentially capped at the moment, obviously notwithstanding any pivots from central banks. So yeah, the Fed are apparently have a meeting or something today, so maybe they're going to come out and announce or say something, but the world is literally suffocating at the moment, and things are severely breaking. I mean, England's pension funds broke. European large investment banks are breaking. I mean, what more needs to break? What are they waiting for? They're waiting for WW3 to break out, or what are they waiting for? But anyway, there we go. Remember, this is not financial advice. I'm not a financial advisor. Always do your own research, and I shall speak to you guys soon.